I'm Rik Esselink, and I'm one of the volunteers at Bitcoin Wednesday. And this evening, we're delighted to have you with us, Professor Lawrence White
Good to be here.
From George Mason University. And I think it's really great to have somebody with your background here. I understand that you are a specialist in the theory of banking and money. And you're also have already for some time really been looking at Bitcoin and blockchain technology. So that's extremely relevant for the phase we're going through nowadays. But maybe before I ask you to go into your research, it might be helpful just to get a quick, deeper introduction on yourself. If you could quickly share a couple points on your background and also how you initially got into this research.
Okay, my PhD in economics is from UCLA, where a Swedish economist named Axel Leijonhufvud was my dissertation advisor. And I wrote my dissertation about what was called free banking, it's a system of privately issued currency back in the gold and silver standard days. So the model was that private currency's value rested on its being redeemable for gold or silver coin. And your bank had to be trusted by the public in order to get your currency in circulation. So I've been interested in sort of private currency models, and one of the inspirations for me was Friedrich Hayek's monograph called The Denationalization of Money. So in a sense, what I was doing in my dissertation was a historical case study of how it had worked. But Hayek was talking about a more modern, non-commodity based kind of money, and it was interesting to what captured my imagination about cryptocurrencies and Bitcoin when it came along was, here is a privately issued non-commodity based currency. How does it work? Turns out it doesn't work the way Hayek imagined it would work. It doesn't work based on promises about keeping its value stable. It works based on a very hard, programmed right into the source code promise to keep the quantity limited. And kind of surprisingly, I mentioned earlier I have a paper that says, we know this would work, it works in the art world to issue prints with limited numbers, but it doesn't seem like a currency model because it means the quantity doesn't respond to changes in demand and therefore the price has to. So it does result in volatile asset prices. And so it's interesting to see going forward whether this is compatible with widespread adoption as a medium of exchange, as a currency.
Right. So you already started to look at Bitcoin in fairly early days, right?
Back when it was worth about $1.
Back when
it was brought to my attention, and immediately I was interested in trying to figure out how it works. Yeah.
Yeah. And you were saying then initially you looked at it, and the fact that the promise to limit the supply is an alternative model for issuing a currency.
Right.
But in those early days, I think almost everybody in the academic world was really looking at this as, maybe an interesting thing, but nothing serious, correct?
Well, like everybody else, if I realized where it was going, I'd have invested more.
Right, right.
But yeah, at the beginning, it looked like a few libertarians had a fun hobby to show that these kind of digital tokens could circulate and they solved the double spending problem, but did it have any practical application? Didn't seem obvious that it did.
Right. So tell us a bit about how your research progressed since then.
Well, so I've written a couple of papers trying to explain to my fellow economists how Bitcoin works, because a lot of them have kind of taken off-the-shelf ideas and tried to apply it to Bitcoin without really understanding the mechanics.
Yeah.
So the first job is to understand, you don't have to understand the cryptography, but to understand the mechanics of how the system works. Then you can see that claims that, oh, it's a monopoly, those are not accurate. Or claims that it's going to be wiped out by its hundreds of competitors, that doesn't make sense either, because each blockchain is unique. It's a different payment system. And the way I like to put it, the proliferation of altcoins doesn't threaten Bitcoin any more than the proliferation of Zimbabwe dollars threatens the US dollar.
Right, right. Yeah, maybe for some of the audience, it would be interesting to just give a quick summary then of how you explain Bitcoin works.
Well, so the traditional model of currency was you had pieces of metal that were valuable because of their content. They had some disadvantages. They're bulky. You have to be somewhat expert to know the purity of the coin. Bankers came along and said, hey, we can issue claims to metal. We're experts in assessing metal. So as long as you trust us, our claims are actually more reliable than carrying around physical coin. And so that was the private money model for a long time, claims on bankers, and these claims are redeemable in precious metal. Governments monopolized that business because of the obvious revenue potential of it. Yeah. So they're the only game in town. And when they decided it's kind of inconvenient to back our money with something that's costly for us to acquire, let's back it with something easier to come by, namely nothing. Right. So when they decided to stop redeeming, we got fiat money, money by decree. Yeah. And so that's been the model since the end of the Bretton Woods system, at least, since the 70s. And so Bitcoin is like a private, non-redeemable, non-commodity-based currency. And the mystery then is, where does the demand for it come from? You could say the demand for fiat money comes from the fact that you can pay your taxes in it, the fact that it's legal tender. And so that's led some economists like Joe Stiglitz to say there's no basis for Bitcoin, and therefore it's all some kind of bubble. But if you know the history of private money, you know it doesn't have to be legal tender. It doesn't have to be receivable in taxes in order for people to value it. Yeah. And in the case of Bitcoin, it's a little mysterious, actually, how it sort of raised itself by its bootstraps into having a positive value. But once it did have a positive value, then people could look at the price it traded at and form some estimate of where it's going and decide how much of it they want to hold. And so ordinary supply and demand analysis works. Right. Now, understanding day-by-day variations in the demand, that's hard to do. I'm not a speculator. But understanding the long-term trend, it's pretty clear that people are excited about the possibilities of uses. I mean, actual economic uses. There's a business case for cryptocurrencies. And since the success of Bitcoin, of course, hundreds have been launched which try to improve on the Bitcoin model. And to the extent people believe that there's a business case for these other coins, they get valued. And so there are hundreds that are worth almost nothing, but there are dozens that are really worth something because they have some promise. Now, they're not all going to pay off any more than every company that's traded on the stock exchange is going to survive. But, I mean, there are real uses, international remittances. There are all kinds of uses for blockchain technology and the open ledger technology that's at the basis of Bitcoin. Right. So economists have a pretty bad track record at having predicted that this would come about in the first place. So we should be, take their predictions with a grain of salt about whether it has a future. We just have to wait and see. Right. Well, I think at least the developments over the past year and the amount of value, at least in market caps, does give some credibility to particular Bitcoin and also some of the other cryptocurrencies now, right? Are we at a historic moment where there is a potential shift from cryptocurrencies being more of a kind of a hobby for a few crazy people to something mainstream? Well, I think if you look at the market capitalization, even though that's not a perfect measure of how much is actually circulating, you have to say yes. At least a lot of people believe that this is a technology that has useful applications. And a couple of years ago, I used to give talks and say, You can understand the importance of Bitcoin by seeing what countries' currencies it's equal in value to. And it was down around the Costa Rica level.
Right.
And now it's, by market cap, it's the #6 currency in the world.
Right.
So that's, quite a change. That's a change in kind, not just a change in degree.
#6 in the world.
Number 6 in the world.
Okay.
Ahead of the British pound, ahead of the Swedish krona.
Oh, I didn't realize it was that's even more than I realized then. And so, what could be the future role in the economy of cryptocurrencies?
Well, there are a lot of projects. As I said, they're not going to all pan out, but so it's hard to predict exactly which role it's going to play. I'm a little skeptical that serving as a retail medium of exchange is in the future, just because the emphasis in the Bitcoin programming is on security, not on speedy transactions. But there are other uses, and for sort of one-off international remittances or over-the-counter financial transactions, those security features are important. And so Bitcoin may be used for those kind of purposes. I mean, clearly it's gotten on the radar screen of the traditional financial institutions.
Right.
And they're all trying to figure out what can we do with blockchain.
Right.
Either with an existing crypto, or can we create a proprietary blockchain.
Right. Yeah, so first talking about Bitcoin. Bitcoin, of course, has had a lot of success, but has also a lot of questions about its scalability and the transaction costs getting extremely high.
Well, the system is very congested right now, that's right.
Right. And due to it being a consensus system, also a challenge for it to be able to keep up with the trend to mass market use potentially, right? So that's why you're saying for Bitcoin it might be more for less frequent transactions, but still some store of value in the economy.
Yeah, bigger, less frequent transactions.
And is there a path towards kind of greater scalability? And also, of course, energy use has been one of the criticisms.
Yeah. One path toward greater scalability would be the development of Bitcoin-based banking.
Yeah.
Right? So banks process transactions quite efficiently at a high rate of speed.
Right.
I mean, Visa and MasterCard and the check clearing system, or the deposit transfer system, processes thousands of payments per second. So if there were Bitcoin-denominated bank accounts, that would provide a great deal of scalability. It does change the system in that now you have to trust somebody, whereas in a purely peer-to-peer system, you don't have to trust anybody. But most Bitcoin transactions are not purely peer-to-peer. I mean, most transactions are with exchanges.
With exchanges anyway.
That's right.
Correct. Yeah, and wallets hosted by third parties, right? So in that sense, it's...
So in that sense, the public would rather have it be easy than perfectly secure.
Right. And would Bitcoin then based banking also solve the question of energy use? Because there's already predictions that Bitcoin will end up using more energy than certain large countries in a few years.
As long as the price of Bitcoin is high, then it pays to invest in Bitcoin mining as much as the expected reward from doing so.
Right.
So I'm not sure it solves that problem.
Okay. And you also mentioned that there are other blockchain projects. There's actually mind-boggling many going on that are
Every time I look at the list on CoinMarketCap, it's changed.
Right. What do you see as some of the alternatives that are maybe most interesting to look at for 2018? Well,
the Ethereum and the other kind of projects that provide a platform for smart contracts, those are very interesting. There are lots of ideas of how to make use of that. IOTA sort of jumped from nowhere into the top 10, promising an Internet of Things technology. That'll be fun to watch. And I've been particularly interested in the projects to tokenize physical assets, in particular gold. So gold has been a traditional alternative to fiat money, but there hasn't been an easy way to spend it. But if you tokenize gold ownership, then you can spend it as easily as any cryptocurrency.
Get back to your original private banking system.
Very much like a private banking. So you do have to trust the vault keeper. And a lot of projects are launching right now, which are not banking so much as warehousing, but we could recapitulate the history of banking as it emerged from gold warehousing.
Right. Okay, that's interesting. And when it comes to really having the ability to be used for kind of everyday transactions as fiat money is today, do you see potential for that to be done on a blockchain, or would that be more, as you mentioned, a blockchain potentially as a backup, but things being done off the blockchain for the daily transactions?
So it depends on whether the public is willing, to what extent, how much of their transaction balances they want to put in a form which has this great volatility of value. So you wouldn't want to have your rent check in Bitcoin and then Bitcoin drops 20% and there goes your rent.
Right.
But as some kind of combined saving investing program with transactability, it may get a toehold. I don't know. We'll see. I mean, traditionally, people want to be paid in something they can turn around and spend easily, in terms of which goods in the supermarket are priced. So that gives the incumbent fiat currencies a great advantage.
Right.
And up till now, we haven't seen sort of spontaneous switches away from the dominant currency, except when the dominant currency is cracking up, when there's really high inflation. Then you see, say, people in Latin America switching from their domestic currency to the US dollar. But it's to the US dollar because that's the established alternative. It's not to gold, and it hasn't been to crypto. But now they have more options. We did see people in Cyprus fleeing into Bitcoin in order to expatriate their money. But that was sort of a one-time event rather than an ongoing using it at the supermarket.
Right. And I suppose then also linking a blockchain to an underlying store of value like gold helps deal with the volatility issue as well.
Well, that's right. So you could link it to gold, but of course gold, when it's demonetized, is also volatile. Not as volatile as Bitcoin has been, but still goes up and down. You can link it to a fiat currency, so that's what Tether is about. But Tether is such a close substitute for fiat currency that they've been having trouble getting the banking system to cooperate with them, to let them do what they want to do. There are some other models like BitShares USD. And then there are possibilities for the future where you could give the cryptocurrency even more stable value than a fiat currency by linking it somehow to an indexed basket of goods. And so there were discussions in the 80s about trying to link private currencies to baskets of goods.
Like a consumer price index or something.
Right, and that kind of commitment is only as trustworthy as the person making it was the old model, but now it can be programmed, or if it can be programmed like Bitcoin is in a transparent way, where that commitment is there for everybody to see and nobody can mess with it, that would be an interesting breakthrough.
And what about regulation? At the moment, it seems that it's becoming suddenly very high on the agenda, of course, with regulators and governments as they see something rapidly growing, which is a fundamental, really a potential fundamental disruption of how our monetary system works.
So the U.S. Treasury has a branch called the Financial Crimes Enforcement Network, and they're always looking for financial crimes. And they have already required cryptocurrency exchanges to follow the rules for knowing their customers, so no anonymous accounts, the anti-money laundering rules, so
KYC.
Report on any suspiciously large transactions. They have a history of stamping out private payment providers who don't play by their rules. So there's always that danger that if transaction volumes get large, that they will become even more involved. And I think particularly they're concerned about the cryptos like Dash that promise more anonymity.
Right.
I mean, were able to figure out who Dread Pirate Roberts was because his transactions were not that anonymous.
Right.
They figured out his IPO and they leaned on his internet service provider. Right.
Well, I think also blockchain is actually also potentially usable as a totalitarian means to take away privacy, because every transaction is recorded on a blockchain. So if states issued a blockchain, it could actually have the opposite impact as maybe some of the initial blockchain inventors intended, right?
Yes. So I can't imagine too many people signing up if it were optional for the state-issued cryptocurrency.
Right.
If it became mandatory, then yes, then we enter a financial panopticon.
Right.
But financial privacy has been under attack since even before 2009 when Bitcoin arrived. So yeah, I mean, that's going to be a struggle. The case has to be made in the public forum that financial privacy is of value. At this point, only the government of Switzerland seems to accept that.
Right. Yeah.
But even they've caved in on the secrecy of their bank accounts.
Yeah. Yeah. And then the business case for Bitcoin, you believe, is there? I guess it's still unclear how it's going to develop.
We have to see. I mean, the sort of first principle of asset pricing is that the asset price is as likely to go up as to go down from where it is now, because the current price embodies all the information people have.
Yeah.
And Bitcoin has stayed up despite the well-known information that the payment system is congested, and especially traditional Bitcoin has the problem of the small block size and limited transactions per second. So a lot of people believe that there are business cases for it. I don't know where the price is going to settle, if it's going to settle.
Well, are we like now in the dot-com boom where, you know, there was a point, of course, where some of the dot-com companies were all compared to each other, and if you look back now, most of those companies didn't survive. A few did, but there are also ones that came along afterwards that actually became bigger.
Sure.
Right?
So there are, I don't forget how many hundred, close to 1,000 listed on CoinMarketCap.
Yeah.
I can't imagine they're all going to be around. There have been cases in 5 years. There already have been cases of coins that were in the top 10 that have gone to zero value, essentially.
Yeah.
So that story could be repeated for the ones that don't have anything unique, that are just Me Too coins, as they're called. Right.
Well, there's some that don't have anything unique. There are other ones, like we were talking about Ripple, where most of the coins are in the hands of the founders, which also poses some challenges, I guess, in the longer term, right?
So the founders have to be careful about not releasing too many too soon.
Right, right. So, okay, well, I think we're very much looking forward to what you have to share later this evening. Are there any other points that I missed that we should cover right now?
I think you've pretty much exhausted what I know.
Okay, well,
but I'm hoping to learn here from the audience, who have probably been following the sort of investment possibilities and therefore studying the business case for different crypto coins more than I have.
Yeah. Okay, well, thanks. We're very much looking forward to your talk. Thank you very much.
Thanks.